This week, we're going to talk about what's impacting the markets. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Charley Martinez with the University of Tennessee. Charley, great to see you.
Good to see you. Good to be with you. I'm coming from live from my mobile office, also known as my truck.
I mean, the life of a reporter, I'm on the road all the time, so this is no surprise for me to find a quiet place to work, and sometimes along the side of the road is the best place.
That is true. Luckily, I'm in a parking lot, so I won't have to worry about nobody passing by me.
Safety first.
That's right.
I do want to say a big thank you to Kellen Havikin, who filled in for me for a couple of weeks while I was out. It is good to be back. We would normally preview a cattle on feed report. We would talk about supply and demand numbers. Neither of those are happening as the partial shutdown of the government continues. So to kick things off, Charley, let's talk about what happened this week in the markets.
Yeah, so, outside of just regular old spot prices and the futures prices, we still get some updates from AMS. So live cattle prices closed at $230.87 per hundredweight, which was up 11 cents from last week. October live cattle futures closed at $238.47, which was up $7.45 compared to last week. And then October feeder cattle futures closed at $357.50, which is up a massive amount, $18.33 compared to last week. Choice box beef closed at $365.22, which is down $1.91 compared to last week. Select box beef closed at $344.33, which is down $2.03 from last week. And then the national base hog carcass price closed at $95 and a penny, which is down $3.37 from last week. And then the nearby lean hog future closed at a solid $97, which is up $1.97 compared to last week.
Charley, I want to talk a little bit about this decline in box beef prices. And I've been gone for a couple of weeks, so I'm not sure quite exactly how it's been covered. But it's been a significant decline within the last month after hitting some of those really moving sharply higher and hitting some of those numbers that were well over $400. Is this more a move, a seasonal pattern, or is this something that maybe we're watching to see where box beef ends up and maybe a gauge in demand?
So part of that is going to be seasonality, right? Coming off of the high. And then as we get into these lulls of the season or the year, we're going to see some pullback and some drawback. But then fundamentally, if you think about it, we have tighter supply, so that probably should give some elevation to keep prices, a little bit higher or elevated, which they are relative to the past couple of years. But then if we start seeing a decline, also that, fundamentally could be some sort of demand. And it kind of gets back to what you were talking about earlier, with some of these consumer demand index numbers that we would usually get around this time. We're not going to be getting those, it looks like. So I think the majority of the function is seasonality while we're seeing a decrease. But they're still relatively high prices compared to the previous years. Again, if we continue to see it drawing back, then we can assume that it has to be some type of repeal on some demand for these animals, because we know tight supplies are in the supply chain right now.
When you look at the elements, we talk about this demand element. We haven't had weekly export trade data for 2 weeks now. It doesn't look like that's going to resume anytime soon for a market like the hog market that's so dependent on demand. How problematic and concerning is it as an economist to not have these data sets to kind of gauge what the rest of the world is doing in terms of purchases of U.S. pork?
Yeah, I think that's a very fair question. And it's a question that I think it warrants being asked as well, because if we think about prices altogether, prices are, examples, or they are snippets of information, right? And if we even think about trade data in terms of volume and quantity and then the value that goes along with trade data, for instance, those are snippets of information that allow the market to operate not only from an efficient standpoint, but also to make risk management decisions or any type of decisions when it comes to buying and selling of the merchandise. And so when we don't have prices, if we don't get information, it creates lack of price transparency. It creates some uncertainty in the markets, and people, you can have folks in the markets that either are going to ride the uncertainty or are going to be barren or taking the hits from that uncertainty. And so at the end of the day, it's lack of information which creates uncertainty in the market, and then that also induces some type of other movements that are not fundamentally a part of price movements, and we can't see that or understand it fully because we don't have any information.
We've talked about this before. I'm a fairly risk-averse person. When we're not getting this type of information and this type of price transparency, does it make it more challenging for producers who are trying to maybe mitigate a little bit of risk and protect their profitability or their bottom line of their operations?
So the short answer is yes. But then there's also the classic answer of an economist. Well, it depends, right? And so sometimes, some people, they play a kind of a risk-free strategy when it comes to the markets. That it is what it is. They really don't do too much market risk management. And so this might be, this uncertainty and this volatility could offer some opportunity. But then also if you're a person that is risk managing consistently and you're someone that's moving volume every week, then this creates a lot of uncertainty, which induces risk. And then therefore that's when you start saying, I don't know what to do because there's no information. So you're kind of having to use other market signals. In the short run, you only have prices on the futures and local prices to make any decisions. And as we know, there's a reason why risk management tools are around, because we know that only relying on the futures markets and spot markets, it only does so much for folks when it comes to risk management. And so these tools are important. And so, lack of information creates that uncertainty, which, I think on average, there are a lot of producers that are probably more risk averse than they would like to acknowledge. But there's also folks that are risk loving and more risk tolerant than they like to admit as well. Because at the end of the day, we still are in agriculture, and most producers are price takers, not price makers. And so that's where the benefit of risk management comes in, and lack of information makes that kind of difficult and also challenging for those producers.
Charley, let's talk slaughter numbers. As we look week over week and year over year, obviously some declines, which isn't a big surprise, knowing specifically on the beef side where supplies are. But man, looking at the percent change year over year is always interesting.
Yep. So on the weekly slaughter side, cattle slaughter for the week was 547,000 head, which is down 15,000 head compared to last week, and down approximately 38,337 head compared to last year. And then an estimated number, if you look at the current weekly report, there is not an estimated number for the year to year or year to date change. So we calculate it in-house, and it's still right around 7%. On the hog slaughter side of things, hog slaughter for the week was at 2.57 million head, down 25,000 compared to last week, and down approximately 6,000 compared to a year ago. And again, unestimated year-to-date slaughter is estimated to be around 2% in our numbers. And so again, every time we talk this year, it's always, on the cattle side, it's that 6.5 to 7%. And then on the hog side, it's always been right around that 2%. So things are holding steady in terms of keeping that supply low at that rate of 7% on the cattle side and 2% on the hog side.
All right, let's get into more of this conversation about the government shutdown. What we normally would have received this week would have been a supply and demand report from the USDA. That did not come out yesterday. When you're thinking about this, as we talked ahead of time, the livestock is kind of the production and looking at where price projections might be. But I always feel like understanding where the projections are for grains is a great tool to think about input costs and thinking about feed costs for our livestock. Talk to me about some of the takeaways. So I want to just broad spectrum. We've lost supply and demand numbers for this month. We likely won't get a cattle on feed report next week for this month. and also losing that trade data and that trade information. Talk about those gaps and about the value that those reports bring.
Yeah, so I think you've done a good job of highlighting the big ones that we don't get, not only from a weekly, but also the monthly perspective. So if we think about trade data, there are trade reports that come out every week from FAS, and I do the crop comments for Tennessee, and so I have not had access to that. And inside those reports, there was always this question about not only on the grain side for China, if they're going to be buying any commodity, but also on the livestock side, it's where is our commodity going? We really can't answer that right now. And so that gets back to the point that we talked about earlier of unknown demand or lack thereof, or is there demand? We don't know. We can't answer that. And then when we start thinking about cattle on feed reports, the unfortunate part was that it looks like we won't get this one. And it was a quarterly report, which we would get some indication on heifer placements in the yards, and we get some of those valuable nuggets that that don't come around every report. And then if we start thinking about the WASI report, I think that's more of the all-encompassing type report that supply and demand, not only for livestock but also on the row crop side of things. And with so much uncertainty, and given today's comments about trade tensions with China, and maybe there's some more tariff increases coming. Not having any data to utilize to understand and to help people think through what does this mean, it creates that giant burden of uncertainty, which is not good to have in the market, because essentially you're kind of left at whatever the market prices are, and that's it. The market prices do have the supply and demand, willingness to pay, willingness to accept on prices, but outside of our own supply, we really have no way of knowing where the demand's coming from. And I think that's where those reports really help. And on the livestock side, like we mentioned, AMS is still cranking out a lot of those reports. But on the crop side, we don't have a progress report, the weekly progress report. We don't have trade data, and so that creates a lot of uncertainty. And right now on the crop side of things, from a livestock perspective, low prices should indicate lower feeding costs, right? But at the same time, a lot of our producers are diversified operators where they actually have livestock and row crops. And on the row crop side of things, we're starting to see balance sheets and cash flow really take a hit, and not having any information to help them think through, especially at this time of the year as we get towards the end of a year, when we start thinking about operating notes and projecting forward in order to secure operating loans for the next year. That it's really unfortunate for those types of producers.
I think thinking about just the farm economy in general right now, as we talk on the livestock side of things, it's a much better situation than it has been in recent years. Row crop, it's not the same story. Knowing that, and just for those who may not know, yesterday, China announced that it was restricting access to rare earth minerals and things that we import and use. And today, President Trump and the administration announced it would likely increase, or it was considering or threatening the use of tariffs to increase in that trade tension with China, and potentially canceling a meeting that was scheduled where ag, specifically soybeans, were on the table to be discussed. So that puts a lot of volatility into the air and a lot of uncertainty. And again, as a risk-averse person, probably makes me a little bit more uncomfortable in conversations talking about the ag economy. Knowing that this is happening and thinking about the borrowing environment, knowing that interest rates where they are, what are some tips or some conversations producers should be having with their lenders, and as they're evaluating and considering operating notes potentially for the upcoming year?
Yeah, so that was actually a topic last week. We actually at the University of Tennessee, we hosted a Southeast Extension conference where we did outlooks, and we had folks from Mid-America or Capital Farm or Farm Credit Mid-America. And we were actually talking about such things to other ag economists with these people. And it was one of those deals where if you're a producer and you really don't know your lender, you have to start that relationship, and there's no time like the present to start that and start working on that, because at the end of the day, that is your nearest friend when it comes to operating capital. One thing that you can do as a producer, if you're operating in the red, and this is probably more towards the folks that have any type of row crop production in their system or in their production, in their farm system, think about your cost structure. Think about, what are you doing on a per acre basis in order to, minimize costs as much as you can, but you also don't want to abandon any good farm management principles. So is there some areas where you can kind of trim off some of the excess cost? And then also when you think about, the row crop side of things, a lot of people got their payments, government payments, a year later this year. And so we've seen a dramatic decrease in loans that were 30 to 89 or 31 to 89 days late in the Southeast. And we monitor that in our center for those states. And we saw a decrease in the last quarterly or last call reports is what they call them. And so that was a positive sign. And so right now it's more of, hey, if you're a producer and that last year was pretty thin and you're going to need to borrow or if not increase your operating capital, get with your lender, start talking to them about what's happening. If they're in agriculture and, if they're a lender that's often working with agriculture folks, they're understanding and they know it. If you're a good manager and you keep good records, they're there to help you. A banker that's lending money does not want that person to default. That's one of the last things that they want to do. So they're going to try to work with you as much as they can. It might come at an expense of a higher interest rate, or you might have to decrease the amount that you usually would get. But you can also look at what kind of assets you have on hand in order to leverage to get more. But for the livestock folks that are listening and you might not quite understand what situation the row crop folks are in, think back to 2019 and how bad those prices were on the livestock side. That's where the row crop people are, but only this is their second, and some folks, this is their third year of consistently bad and almost unheard of profits where they cannot reach, they have no chance at profits. So it becomes really stressful. And I think if you're also a producer and you're stressed out, it's okay to ask around and ask for some help, just because this is mentally, it's draining. It's something that's very serious. It needs to be taken serious. And, if you're a producer that's struggling a little bit, it's okay to ask for help and think about that.
I will add to that, there are resources available, and we can link some of those in our newsletter that comes out on Saturday mornings that attaches to this. But use those resources. Are you also, as you're talking to producers right now, I think about budgets and knowing your cost of productions and being really close with your calculator and your pen and paper right now. Is that, as those conversations with lenders are happening, is it more imperative at this point for producers? More information is better right now? Yes,
100%. Even if you're the livestock side, if someone is on the livestock side of things, this is a year where we probably have had some of the biggest profits that we've ever seen as well. So even budgeting for that and understanding what to do is very important. And so, if you're somebody that only takes records or only is inside your budgets and trying to look at them every once in a while, you probably need to start doing that more frequently, at least monthly. And if you're a livestock producer where you actually have excess profit this year, keep in mind, it is okay to pay your taxes. It's okay to pay taxes. That means you made money. And so, you don't want to make light of the situation against the row crop folks. But if you're on the livestock side, budgeting is just as important because, we know that this is a boom and bust type of market. So do things that if you're going to reinvest into your operation, do so strategically. Think about how to lower your costs in the future when prices and revenues are not as high as they are now. And if you're on the row crop side, budgeting and thinking about how to, shave off excess cost or where opportunities to increase any type of revenue that you can, minimizing any risk that you can. I know we talked about how it becomes a little bit more difficult. right now you still can do some things in the options markets in order to help at least give some type of floor. And if prices were to rebound, i.e., if China was to start taking in soybeans and we see prices skyrocket, you have all the gravy on top and you gave yourself a floor even right now. So there are still things you can do. But number one, knowing your cost of production is always key. And then if you don't know your lender, get to know them. And if you know your lender, be having frequent conversations, because that lender, I guarantee you, you're not the first producer calling them on that day or that week, talking about the situation. They understand that and they're there to help you.
Charley, it's great to see you.
It was good to see you. I'm glad the parking lot was safe for me.
I'm very glad that you were safe as well. We will see you in a couple of weeks.
Yes, ma'am.
All right. To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.